You ever find yourself scrolling through property listings, kind of daydreaming about the passive income, but then you freeze? You're hit with that one big question. How do you really know if a property is a winner or a total dud? Well, today we're going to cut right through all that confusion. We're giving you a simple, super powerful framework to analyze any deal, so you can finally and confidently take that first big step. Because, that's the whole ballgame, isn't it? It's the one thing that keeps every new investor staring at the ceiling at night. How do you find that gem that's going to put cash in your pocket every single month? And how do you dodge the one that just becomes a nightmare that drains your bank account? The answer, my friends, is knowing exactly what to look for before you even think about signing on the dotted line. And listen, that is not me being overly dramatic. That's a direct quote from the source material. Real estate investing is, without a doubt, incredible, but it's also absolutely filled with hidden traps for anyone who's unprepared. The great news? You can totally learn how to spot them from a mile away. To do that, we're going to arm you with a super simple framework. Think of it like you're putting on 3 different pairs of glasses to look at any deal. First, you'll look through the location lens. Then you'll switch to the market lens. And finally, the most important one, the numbers lens. If you can get these 3 things right, trust me, you are way, way ahead of the pack. All right, let's jump right in with that first lens, the location. You've heard it 1,000 times. Location, location, location. And you know what? It's a cliche for a very good reason. It is the single most critical factor of your investment, and it's the one thing you can never, ever change. But let's be honest, that phrase is a little vague, isn't it? What are we actually looking for? It's about way more than just a pretty street with nice trees. A good investment neighborhood has very specific, measurable qualities that attract and, more importantly, keep great tenants. So let's break it down. These 4 keys are what separate a nice area from a profitable one. First up, your tenant profile. Who are you renting to? A place near a university is great for students, but that also means high turnover every year. A 3-bedroom house, suddenly the quality of the local schools becomes your #1 selling point. Second, safety. It's non-negotiable. Don't just get a feeling, go look up the actual police stats. And here's a pro tip. Don't just look at the numbers, look at the trend. Is crime going up or down? That tells you where the neighborhood is headed. And finally, amenities. Things like parks, good coffee shops, grocery stores. That's not just a bonus. It's a feature that allows you to charge higher rent and attracts people who want to stick around. And here is a piece of advice you will not find on any spreadsheet. The official data is important, but the people who actually live there, they have the real scoop. Homeowners are great, but you know who's even better? The renters. They have zero financial reason to sell you on the neighborhood, so they'll give you the honest truth about the loud train tracks, the terrible parking, and that one weird neighbor. Okay, let's switch to our second lens, the market. You see, you could find the most beautiful house on the best street, but if it's in a town with a shrinking economy, you're making a risky bet. You've got to know if the area as a whole is growing and attracting people, or if it's slowly fading out. So where do you find this stuff? Your best friend here is the U.S. Bureau of Labor Statistics, the BLS. A healthy, growing job market. That's the engine that powers everything. If a big company announces they're opening a new headquarters in town, you can bet your bottom dollar that thousands of people are about to start looking for a place to live. Next, you gotta look into the future. Your local city planning department is an absolute goldmine. Are they planning new parks, new subways, new shopping centers? Awesome. That's a huge sign of growth. But, and this is a big but, you have to be careful. If you see they're about to build a giant 300-unit apartment building right next door, well, that's not growth, that's new competition that could push your rent prices down. And that leads perfectly to this, one of the biggest indicators of a market's health, vacancy rates. It's basic supply and demand. If hardly any rentals are empty, it means demand is high, and you've got the power to nudge rents up over time. But if you drive around and see 4 rent signs on every single block, that is a massive red flag that tells you you're going to have to fight on price just to get someone in the door. So the bottom line is this. You're looking for that sweet spot, an area with solid job growth, smart future development, and really low vacancy rates. That is the trifecta of a market that's primed for investment. And now for our third and final lens. Honestly, this is where the dream meets the reality, the numbers. You can find the perfect house in a booming market, but if the math doesn't work, it's not an investment, it's a hobby. and a very, very expensive one at that. And the only number that truly matters at the end of the day is cash flow. It's that simple. After you collect the rent and after you pay every single bill, the mortgage, the taxes, insurance, repairs, all of it, what is left over? That positive number in your bank account, that is your cash flow. That is your profit, period. This is the basic math right here. You start with what you think you can get for rent each month, then you just start subtracting. The mortgage is the obvious one, but don't you dare forget property taxes and insurance. Just get the annual cost and divide by 12. And this is crucial. You have to budget for maintenance and repairs because I promise you, things will break. Whatever's left at the bottom, that's what you're working for. And speaking of costs, this is where so many new investors get wiped out. You have to hunt down the hidden ones. Call the city and ask if property taxes are going to jump up after the sale. It's a nasty surprise for a lot of people. Get a real insurance quote. Don't just guess. It can be shockingly high in places with floods or hurricanes. And if you're not going to manage it yourself, you have to budget for a property manager. That's usually 8 to 12% of the rent. Gone, right off the top. These things aren't small details. They can be the difference between making money and losing it. So you get it now. You've got the 3 lenses: location, market, and numbers. You know what to look for. So the big question is, how do you actually take all this theory and put it into practice? Okay, let's turn all this knowledge into a simple, step-by-step action plan. This is your playbook for going from someone who's just curious to someone who's a confident buyer. Here it is, your 4-step playbook. Step 1 is so important. Do your own research before you call a real estate agent. Why? Because you need to be the expert on what you want. You tell the agent which neighborhoods and what type of property you're looking for, not the other way around. Step 2, get the real scoop. Boots on the ground. Drive by the property on a Tuesday morning, then go back on a Friday night. Is it peaceful or is it party central? The vibe changes. Step 3, choose your business model. A single-family home might get you a family that stays for 5 years. A condo is less outside work for you, but you've got HOA fees to deal with. Know the pros and cons. And finally, step 4, secure the deal. Have your financing ready to go so you can act fast. And I'm going to say it one more time. Never, ever, ever skip the professional inspection. It's the best money you'll ever spend. And just a quick but really important heads up on financing. Banks view investment properties as being way riskier than the home you live in. So what that means for you is you need to be prepared for a much bigger down payment, usually somewhere in that 20 to 30% range. Look, if you boil this entire explainer down to just one core idea, it's this. The only thing separating the success stories from the horror stories is the quality of your homework. Doing the research we've talked about today isn't optional. It's the entire foundation of a smart investment. Your first property is absolutely out there, waiting for you. The path to finding it isn't some big secret, but it does take effort. So the only real question left is, are you ready to do the footwork to go and find it? If you got value from this, hit the like and subscribe for weekly investor breakdowns, and keep building your real estate foundation brick by brick.